Picture this. Berlin, July 1945. You're standing in the ruins of a department store on the Kurfürstendamm. The shelves have been empty for 2 years. The roof is gone. You can see the sky through what used to be the third floor, but there are men here, and they are doing business. The currency is not Reichsmarks. The Reichsmark died last month. The currency is American cigarettes, not cartons. Individual cigarettes. Prist to the unit. The man next to you, who was, until April, a senior clerk at the Deutsche Bank branch on Unter den Linden, is counting out 11 cigarettes from a tin. He is trading them for a pair of shoes. Children's shoes, size 4. He examines the sole. He puts 1 cigarette back, 10 cigarettes. Final price. The man across from him pockets the tin, picks up the shoes, and walks out through a gap in the wall without looking back. You have just watched the Berlin foreign exchange market open for the day. This isn't reconstruction. This is the documented record. British Military Intelligence Field Report 47 Viri filed September 1945 and held at the National Archives in Kew under reference WO 208-3781 describes the Kurfürstendamm exchange in those exact terms, cigarettes traded to the individual unit prices set by negotiation, a functioning market operating in a building with no roof. The report's author, a Major H.G. Stockley, notes with evident frustration that the network had been operating continuously since at least May 1945. The Reichsmark, he writes, was accepted only as a last resort and at a significant discount. This wasn't an exception. This was the system. Post-war Vienna, 1945. The Allied Control Council documented a parallel cigarette economy, moving an estimated 6 million cigarettes per week through informal exchange networks across the city by October of that year. The Austrian shilling existed on paper. The cigarette cleared. Occupied Tokyo, 1946. American cigarettes. Lucky Strike and Camel specifically functioned as a de facto second currency alongside the military payment certificate. The Bank of Japan's own internal records, partially declassified in 1998, show informal exchange rates between cigarettes and yen being tracked by the bank's economists as a real-time inflation indicator, not because they endorsed the practice, because the cigarette rate told them something the official rate could not. And the Ruhr Valley, Germany, 1947. A UNRA survey of 1,200 households across 3 occupation zones found that 73% of all major transactions valued at more than 1 week's official wage, were conducted in cigarette currency rather than Reichsmarks. Not because people preferred cigarettes, because the Reichsmark had lost the one thing a currency requires in order to function: the trust of the people who are supposed to use it. Here's the question that actually matters. Every time an official currency has failed during wartime, and this channel has now gone to the documented record of 19 such failures, something replaces it, not randomly, not chaotically, according to patterns that repeat across conflicts, across decades, across continents. The official story of post-war Berlin is a story about ruins, occupation zones, and the Marshall Plan. The forensic record tells a different story. One that was running underneath the official story before the Marshall Plan existed, before the Deutschmark existed, before the Allied occupation had agreed on a single policy. A parallel financial system. With its own commodity, its own pricing mechanism, its own enforcement structure, and its own information network. The question isn't that it formed. The question is how it worked. Who built it? How it priced a cigarette to the unit when there was no exchange rate, no central bank, and no legal authority to enforce any agreement. Why the men who ran it became indispensable to the same military police whose job was to shut them down. And what happened to all of it on June 20th, 1948, the date that reset the German economy overnight and made everything these networks had built worth exactly nothing. That is what this video is about. By the end of this video, you will know exactly how the Berlin cigarette economy functioned. Not as a curiosity, not as a footnote to the Marshall Plan, but as a complete financial system. You will know who controlled it, how it priced its commodity without any institutional price-setting authority, how it enforced contracts between strangers in a city with no functioning courts, and what finally destroyed it. I went through the British Military Intelligence Field Reports from 1945 and 1946, The declassified files of the U.S. Army Counterintelligence Corps held at the National Archives in College Park under Record Group 319 the UNRA survey data from 1947, and the academic literature, specifically Paul Marer's 1974 study on post-war occupation economics and Charles Kindleberger's analysis in The World in Depression, which remains the authoritative forensic account of the European monetary transition. I pulled the record that those sources contain. Not theory, not speculation, documented history. Stick with me. Before we go into the specific case, I want to give you the analytical lens, because every wartime hidden economy I have examined in this channel, and I have now been through the documented record of 19 of them, from the prisoner of war camp cigarette economies documented by economist R.A. Blee Radford in 1945 to the post-Soviet barter networks of the 1990s, runs on 4 components, every single one, without exception. Once you can see these 4 components, you can read any hidden economy. You can tell which ones were stable, which ones were fragile, and exactly where and why they broke. Here they are. Component 1, the commodity. Every hidden economy needs a medium of exchange. The commodity that fills this role is never chosen at random. It has specific properties that make it function as money. When institutional money fails, it is portable, divisible, durable, and crucially, universally recognized without requiring any institutional backing. The commodity carries its own credibility. No one needs to trust a government to accept it. In Berlin in 1945, that commodity was the American cigarette. Why not gold? Why not foreign currency? Why not food? The forensic record has a specific answer, and it is not the answer most people expect. Component 2, the network. A commodity needs a distribution structure. Someone has to move it, store it, and connect buyers with sellers across a city, or a region, or a continent. In every hidden economy I have examined, this network was not built from scratch after the official system failed. It was assembled from the pre-existing skills and relationships of people whose pre-war positions had given them exactly the capabilities the hidden economy required: logistics knowledge, cross-border connections, language skills, access to supply chains that the official system did not control. The question of trust. How 2 strangers who cannot take each other to court agree to exchange something of real value has a specific, documented answer. Component 3, the price mechanism. This is the component that economic historians most consistently underestimate, and the one TMA examines most closely. How are prices set? In a market with no official price-setting authority, no published exchange rates, and no legal enforcement of price agreements, the expected answer is chaos, exploitation, random variation. The forensic record gives a different answer. Prices in wartime hidden economies stabilize faster than economists predict, and they do so through a mechanism that is consistent across every case I have studied. Component 4, the exit. Every hidden economy ends. The mechanism of its ending determines what happens to the people who built it and the value they accumulated. Currency reform, military defeat, cooptation by occupying forces, internal collapse when the commodity loses its exchange function. Each exit mechanism produces a different outcome, and the Berlin exit, which came on June 20th, 1948, is one of the most precisely documented in the historical record. Those are the 4 components. Now let's apply them to Berlin. Here's the brutal math on the Reichsmark. By May 1945, the Reichsmark had lost approximately 97% of its purchasing power relative to 1938. The Reichsbank had printed currency to fund the war at a rate that the economist Günter Schmalders, writing in 1948, calculated had increased the monetary base by a factor of roughly 6 in 7 years. But Schmalders' figure is the conservative one. It counts only officially issued notes. The occupation documentation suggests a higher effective circulation when occupation scrip, military payment certificates, and forged notes are included. The official ration system, administered by the Allied occupation authorities after May 8, 1945, provided approximately 1,550 calories per day to a normal consumer in the British zone. This was the official figure. The documented delivery rate, the calories actually reaching consumers, was consistently lower. The British Food and Agriculture Section's internal report for September 1945, held at the National Archives under reference FO 1030/102, records actual delivery at approximately 1,200 calories per day in urban areas. A level that is, as the report's author notes in language that is careful to the point of clinical detachment, below the minimum required to prevent progressive weight loss in a sedentary adult. People needed to supplement. The Reichsmark could not be used to supplement. It bought nothing that was not already rationed, and the rationed goods were not enough. Here's what the forensic record actually says about why cigarettes specifically replaced it. In July 1945, the U.S. Army issued a standard daily ration that included a pack of cigarettes, 20 cigarettes, to every American soldier stationed in Germany. The soldiers did not all smoke. The cigarettes, however, were universally accepted by the German civilian population as a medium of exchange. By August 1945, the exchange rate had stabilized at approximately 60 to 80 Reichsmarks per cigarette. Not per pack. Per cigarette. Why cigarettes and not, say, canned food, which the soldiers also had in abundance? The CIC field reports document the answer explicitly. Cigarettes were portable in a way that bulk food was not. They were divisible. You could price a transaction at 3 cigarettes, or half a cigarette, or 11 cigarettes in a way that you could not price a transaction in canned meat. They were durable, they did not spoil, and they were universally recognized. Every German adult knew what an American cigarette was. No explanation was required. No institutional backing was necessary. R.A. Radford had documented the same mechanism 3 years earlier in the prisoner of war camps of North Africa and Italy. His 1945 paper, The Economic Organization of a POW Camp, published in Economica, is the foundational academic study of commodity money formation. Radford, who was himself a prisoner, documented how Red Cross cigarette rations had become the standard currency in camps across 3 continents. Independently, without coordination, through the same logic of portability, divisibility, durability, and universal recognition, same commodity, same mechanism, same outcome. Once you have seen it in Radford's camps, you recognize it immediately in Berlin, who's the part the official record doesn't show. The Berlin cigarette network was not built by soldiers, though soldiers were its primary upstream supply. It was built by a specific category of people whose pre-war occupations had given them capabilities the hidden economy required. The CIC documentation, specifically the weekly situation reports for the Berlin Area Command held at the National Archives under Record Group 319. Box 14 identifies 3 recurring categories of network operator in the Berlin market between 1945 and 1948. The first category, former commodity traders and import-export merchants. These were men who had spent their careers moving goods across borders, maintaining supplier relationships, and managing the logistics of physical distribution. The war had destroyed their official businesses. It had not destroyed the relationships, the knowledge of supply chains, or the language capabilities that those businesses had required. The second category, former Wehrmacht and SS supply officers, men whose wartime positions had given them detailed knowledge of military logistics networks, storage facilities, and the movement of goods across occupied Europe. The CIC reports document this category with particular frustration. These were men who had access to information about undeclared stockpiles that the occupation authorities did not know existed. The third category, the Trümmerfrauen and their male equivalents. The people who had been navigating the informal economy of wartime rationing since 1942, who had maintained neighborhood-level exchange networks under the Nazi rationing system, and who carried those networks intact into the post-war period. Here's the crucial detail on trust. How do 2 people who cannot take each other to court, who are operating outside any legal protection, in a city under occupation administration, where the applicable law changes depending on which sector you are standing in, agree to a transaction worth real value? The CIC documentation describes a 2-layer enforcement mechanism that appears consistently across the Berlin network and that the forensic literature has since confirmed in every wartime hidden economy I have examined. The first layer was repeat transactions. The Berlin cigarette economy was not a one-time bazaar, it was a set of ongoing relationships. A seller who cheated on a transaction did not simply face no legal consequence, he faced exclusion from the network. and exclusion from the network in a city where the network was the only functioning exchange system was an economic death sentence. The second layer was community backing. The neighborhood-level operators, the third category described above, functioned as guarantors. Their word that a counterparty was reliable was itself a tradable asset. Reputation was collateral. The CIC Field Report for November 1945 describes this explicitly. Transactions of significant value are rarely conducted between strangers. They are conducted through an intermediary whose standing in the network is sufficient to backstop the exchange. Here's the brutal math on scale. British military intelligence's estimate, contained in the September 1945 Field Report, put total cigarette currency circulation in the British zone of Berlin at approximately 900,000 cigarettes per week by late summer 1945. By early 1946, the American Counterintelligence Corps' own estimate for the combined zones was 1.5 to 2 million cigarettes per week. These figures represent the minimum documentable flow, the transactions that left a visible trace. The CIC's own methodology note acknowledges that the actual volume is likely to exceed the documented estimate by a significant margin. At the peak exchange rate of approximately 80 Reichsmarks per cigarette, 1.5 million cigarettes per week represented a weekly transaction volume of 120 million Reichsmarks. For context, the entire official weekly payroll for the Berlin City Administration in September 1945, paid in Reichsmarks, was approximately 18 million Reichsmarks. The cigarette economy was moving roughly 6 times the official wage economy. Every single week, same network structure, same enforcement mechanism. Identical to Radford's camps. Identical to the post-war Austrian documentation. Same pattern. Same stages. Same outcome. Here's where it gets counterintuitive. The expected account of black market pricing is chaos. Desperate buyers, exploitative sellers, random variation, no stability. This is the account that appears in most popular histories of the occupation period. It is not the account that appears in the forensic record. The UNRA Economic Survey team that conducted a systematic study of informal market prices across 3 occupation zones in the winter of 1946 to 1946 found something that surprised its own researchers. Cigarette prices, expressed as a ratio of cigarettes to standard goods, varied by less than 12% across the 3 zones at any given measurement point. In a market with no official price-setting authority, no published exchange rates, no legal enforcement, and no central bank, prices were converging toward a common level with a consistency that mainstream markets during the same period could not match. Here's what the forensic record actually says about how that happened. The price-setting function in the Berlin cigarette economy was not distributed evenly across the network. It was concentrated in a small number of individuals whom the CIC documentation describes, in bureaucratic language that is considerably more interesting than it sounds, as information brokers. These were not necessarily the largest traders. They were the operators with visibility across multiple nodes of the network simultaneously. Men who knew what the exchange rate was at the Tiergarten exchange point, at the Alexanderplatz exchange, at the exchange operating out of a basement on Kantstrasse, and at the informal market running inside the ruins of the Anhalter Bahnhof. They did not always trade goods themselves. They traded knowledge of what goods were worth. A man named Werner Bohm, documented by name in the CIC Weekly Situation Report for the Berlin Area Command, dated March 12, 1946, is described as an exchange rate reference for the Charlottenburg sector of the British zone. The report notes that Bohm had no fixed location. He moved between exchange points. His function, as the CIC analyst describes it, was to communicate current pricing across the network and to arbitrage discrepancies. He was, in modern financial terminology, a market maker. He had no authority. He enforced no contracts. He simply knew more about current prices than anyone else in the network, and people paid for that knowledge with access to their own price information. Here's the brutal math. The UNRAA survey data shows that the cigarette-to-bread exchange rate in Berlin stabilized within approximately 6 weeks of the occupation beginning in May 1945. Within 6 weeks. With no central bank, no official exchange rate, no legal market infrastructure of any kind, the informal market had produced a stable, consistent price level. The Kindleberger analysis confirms this finding and notes that the stabilization rate was faster than that observed in any officially managed currency transition of the same period. The information broker network was the reason, not altruism, not coordination by the occupation authorities, who were, during this period, actively trying to suppress the market. The price stability was a product of the network's own information infrastructure, built by the operators, for the operators, because price certainty was the condition that made high-value transactions possible. Here's what happened when that infrastructure was disrupted. In February 1947, the British occupation authorities arrested 17 individuals in a coordinated operation against the Tiergarten exchange network. The CIC after-action report documents the consequence. Within 72 hours of the arrests, cigarette-to-bread exchange rate variations across the British zone had increased from the usual 8 and 12% band to a variation of over 40% band to a variation of over 40%. The price stability that the network had built and maintained for nearly 2 years collapsed within 3 days of its information brokers being removed. It restored itself within approximately 3 weeks as new information brokers established themselves. Same mechanism. Same fragility when the information layer is removed. Same recovery pattern. Documented in the post-war Austrian data, the occupied Tokyo data, and the Ruhr Valley data from the same period. The forensic record is more complicated than the official account and considerably more useful. Here's the number nobody talks about. On June 20th, 1948, the Allied occupation authorities implemented the Deutsche Mark currency reform. Every German holding Reichsmarks was permitted to convert at a rate of 10 Reichsmarks for 1 Deutschmark for an initial holding of 60 Reichsmarks per person. Amounts above that threshold converted at 100 Reichsmarks for 6.5 Deutschmarks, an effective 93.5% loss. Bank accounts above a threshold were subject to a 90% cut. The reform was designed by a team led by Ludwig Erhard, then director of the Economic Administration for the Bizone, and by American economists from the OMG-US Economics Division. Its specific terms had been under negotiation since 1946. The date had been known within the network for approximately 3 weeks before implementation. Here's what the forensic record says happened in those 3 weeks. The CIC Weekly Situation Report for June 5, 1948, filed 2 weeks before the reform, documents a sharp and specific change in the Berlin cigarette economy. Transaction volume did not fall, it accelerated. But the direction of transactions reversed. Operators who had been accumulating cigarette currency began converting it, not into Reichsmarks, which they understood would be worthless, but into durable physical goods, tools, fabric, leather, machine parts, anything with a non-monetary use value that would survive the currency reset. Werner Boeb. The information broker documented in the 1946 CIC report does not appear in any CIC documentation after June 10, 1948. He is not listed in any arrest record. He simply disappears from the record. The British Military Intelligence Field Report for July 1948, the first filed after the currency reform, describes the Tiergarten exchange as no longer operational. The Alexanderplatz and Kernstrasse exchanges are described in the same terms. The cigarette economy did not collapse on June 20, 1948. It had already begun its own orderly liquidation in the 3 weeks prior. The operators who had built the network and who had maintained information advantages throughout its existence used that same informational advantage to exit before the reset came. Here's what happened to the people who had not built that advantage. The UNRA survey team conducted a follow-up study in September 1948, 3 months after the currency reform. It found that households in the bottom income quartile, those who had participated in the cigarette economy as buyers rather than as operators or information brokers, had seen their effective purchasing power fall by approximately 47% in the transition. They had held cigarette currency as a store of value and had not been positioned to convert it before the reset. The households in the top income quartile, those with documented network positions, had seen their effective purchasing power fall by approximately 11% in the same transition, same currency reform, same date, same city. A 47% loss versus an 11% loss. The difference was the position in the network and the information that position provided. The exit event was not the destruction of the Berlin cigarette economy. It was the final demonstration of its most important structural feature. The people with the best information about how the system worked were also the best positioned to survive the system's end. Here's what the forensic record shows. Not just for Berlin. Across every wartime hidden economy this channel has examined. On the commodity, the medium of exchange that replaces failed institutional currency is never chosen for sentimental or ideological reasons. It is selected by the market through millions of individual transactions based on four properties: portability, divisibility, durability, and institutional independence. The commodity that scores highest on all four wins. In 1945 Berlin, that was the American cigarette. In Stalag prisoner of war camps, documented by Radford, it was also the cigarette. In post-war Vienna, it was also the cigarette. In occupied Tokyo, it was the American cigarette. The commodity is not random. Its selection follows a logic that predates the specific crisis and will follow the same logic in the next one. On the network, the stability of a hidden economy network is determined entirely by the trust mechanism it builds and the absence of legal enforcement. The Berlin network used reputation and repeat transactions, the same mechanism documented in the Warsaw Underground Credit Network of 1942, the same mechanism documented in Sarajevo in 1993, the same mechanism documented in every informal economy that has maintained stability under conditions where formal legal protection is unavailable. The fragility is always the same. Remove the key nodes, and the trust infrastructure collapses. It rebuilds. But the window of collapse is the moment of maximum vulnerability for everyone participating. On pricing, wartime hidden economy prices do not stabilize slowly, and they do not stabilize randomly. They stabilize faster than official transitions, through the emergence of information brokers who concentrate price knowledge and distribute it across the network. The price stability of the Berlin cigarette economy in 1945 and 1946 was not an accident. It was the product of a specific identifiable infrastructure that the occupation authorities found and destroyed in February 1947, watched collapse, and then watch rebuild itself in 3 weeks because the underlying incentive structure, the value of price certainty to high-value transactions, had not changed. On the exit, the single most reliable predictor of a hidden economy's destruction is not military defeat, and it is not the return of institutional authority. It is currency reform, the moment when the official system offers a new medium that is credibly backed. When that moment comes, the hidden economy does not fight it. It liquidates. The operators who built the information advantage use it to exit. The participants who built no information advantage absorb the loss. The question I'll leave you with is this. Every wartime hidden economy in the forensic record formed because the official medium of exchange lost the trust of the people who were supposed to use it. Not slowly, quickly. The cigarette economy in Berlin was fully operational within weeks of the Reichsmark's collapse. Not months, not years. The price-setting infrastructure was functional within 6 weeks. The network reached an estimated 1.5 million cigarettes per week within 6 months. The question of what happens when the modern equivalent of that trust failure occurs. Not in 1945. Not in a bombed-out department store in the Kurfürstendamm, but in a digitally connected economy where the medium in question is not cigarettes or Reichsmarks but access to the financial system itself, is one the forensic record of 1945 cannot directly answer. But it can tell us what the early pattern looks like, and it is worth knowing. Now go learn how the commodity your hidden economy would use actually works before the official system that makes it unnecessary stops working. Drop it in the comments if you already hold an asset that functions without institutional backing. I read every single one. Subscribe to The Money Architect. This channel examines the hidden economies that formed when official systems failed, the documented evidence of who built them, how they worked, and what they reveal about real value when governments lose control of their own rules. Tell me which hidden economy you want me to dig into next. I read every single one.